To the room. Man, what are these flashing numbers? Goodness gracious. Hey, Erla. Hey, Nanda. Guys, this is it's contract rolling time. For those of you that didn't get the notice, maybe didn't roll yesterday. So this morning I'm doing my little volume checks, and you'll notice that the S&P, the June contract, has more volume than the March. So I rolled, and now I'm where the volume is. The Nasdaq has rolled. The crude oil has rolled. So if you haven't rolled yet, it's a good time. Hey, good morning, Ron. Good morning, Steve. Good morning, Bob. It's time to roll your contracts, ladies and gentlemen. If you're a TradingView, if you're one of our beta testers on TradingView, I put a link in the traders chat how to roll them on TradingView as well. Roll them if you got them. And now we're going to check a little news and see what's going on. Some days this is a good thing. Some days we need news to knock the market loose. But today there's really nothing happening. A lot of low impact nonsense. Don't really worry about that. Tomorrow we see those red boxes, but not until 2 o'clock. FOMC tomorrow, guys. Get your tea time set up. But I check this every morning just to make sure that I'm not trading into high impact news because it can really upset the apple cart, if you will. Everything that I'm going to talk about this morning, believe it or not, is going to come right from the Nexgen page. Guys, no secrets. Do I have any new folks in here today? Just want to make sure if I do or do not. Guys, repetition is all I do. It almost seems silly, but I say the same thing every day. I talk about the same thing every day. We do the same thing every day. And what we do is found on the trading page. And if you go to the frequently asked questions, there's some definitions. Guys, these are great to look through anyway. But there's a high probability trade. And this is each indicator on every chart agrees with the rules for the trade, guys. Triggers are strongest. Nothing's in the way. Life is good. This high probability trend trade that we teach each and every morning, that I teach each and every morning, is a trade that typically wins 70 to 80% of the time if you just follow those darn rules. It's a trade that creates a boatload of confidence because they say, you know who they are, they say that confidence is just the memory of success. So if you're putting yourself in a position to be a little more successful, you're putting yourself in a position to become more confident, more trusting in the software and what you're looking for. But the most important thing that it does, guys, is it teaches you to read your charts. You're learning to read your indicators. Nexgen software is a tool. It's the world's greatest elliptical. It's the heaviest weights you can lift, right? But if you don't get out there and do the work, if you don't learn how to use the elliptical, you never figure out how to turn it on, you never lose weight. So we're going to take an entire hour this morning and we're going to talk about this high probability trend trade because what you're going to realize is a couple things. First is that 90% of your day is doing nothing. 90% of your day is sitting on your hands waiting for advantages, waiting for a pattern to present itself, a pattern that's been proven to win more than it loses. And once you can read your charts, you're going to understand a couple of the key concepts that are going to carry you into the great beyond, guys. You're going to understand where the market is likely to continue. Initially, this is your entry for a trend trade, the high probability trend trade. Where is the trend most likely to continue? Let me enter there. You're going to understand where the market is likely to go. You're going to be able to use your chart reading to identify obstacles in the way of your trade, and you may choose to get paid there, and that becomes very important for the management plan. And then finally, you will understand where the market is likely to stop. And I love likely to stop areas because likely to stop areas is this giant red flag that says, hey, you and your money are important. There's no reason to trade into this area. We're letting you know that it could stop the market. Why don't you go make a sandwich instead of give your money up? So we're going to focus on this trade because it's the easiest trade, I think. And I try to teach it as the easiest trade. It's only 3 rules. You're going to try to create more. You're going to try to create addendums and amendments and your own version of them, and that's cool. But if you're brand new, letting them be as simple as they're presented is a huge advantage because it's only 3 rules, and each rule creates an advantage. And guys, the only way I'm taking a trade is if the 3 advantages are in play. This is for the brand new user. You will grow outside of this trade, and it won't take you long at all. But if you focus on strong triggers, no terminations in your entry, you get momentum, clear path, and a well-defined, precise entry area. These first 2 advantages, momentum and path, these are the 2 that are going to carry you next level. These are the 2 that are enough to create a very solid, profitable, consistent plan. So I want you to really focus on creating a solid understanding of momentum and path. And then once you have these 2, you're going to know when it's, man, take the trade and don't worry, or take the trade and manage aggressively, because you're going to be speaking to yourself in terms of advantages. Hopefully you're speaking them out loud when you look at your chart, scaring the cat, scaring the dog. Your husband, your wife should get excited about odds favorable momentum if they're in a room near you. These 3 rules happen on 2 charts. That's it. Again, simplicity. I'm breaking this down to the lowest common denominator. There's a large chart and there's a small chart, which is your entry chart. Your large chart will define direction, momentum, and areas using the most current printing bar. Don't even care about all the bars behind it. This one bar is going to define the direction you should be looking for your rules to be met. It's going to define the momentum, that is rule number 1 being met, and it's going to define the areas that could hinder your clear path, making sure that rule number 2 is met. Your large chart is a slow moving chart. It's very difficult to see change on this chart. It's a broad stroke of a brush, if you will. You are painting your living room wall, and you haven't even thought about going around the light sockets or the switches, right? Rules 1 and 2 are met on this chart that shows the overall opinion of the market. But when they're true, when I have those core advantages, that best of the best look, that's when I'll go to my smaller chart, my entry chart. And this chart is just going to refine that broad stroke of a brush. It's going to show you the inner workings. If the large chart goes from A to Z, you're going to see B through X on the small chart. You're going to see about 20 to 30 bars it's going to refine, but this is where your accuracy comes in. This is going to allow you to pinpoint where the market is most likely to continue. This is going to reduce your risk, and it will increase your profitability. Rule number 3 is designed to give you that accurate entry, but only when the first 2 rules are met. We use these 2 charts, my favorite metaphor, because you should ask yourself, who am I trading with? Or who am I trading against? Have you ever tried to walk on the wrong side of the mall during Christmas? It's damn near impossible, right? This is the large crowd, guys. This is that mass of people with all the money, and they create trends, and they establish momentum, and they react at key areas. And it's so much easier just to go with them. But there are those of us that like to fight, and that's the small crowd. But the small crowd, our small chart is still, they're way more influence than you and I will ever have. And they do fight. And they typically make it right down to a bounce point, and then they fail. They say, you know what? It's not worth the fight. 70 to 80% of the time, they say, nope, let's turn around and go the other way. Your rules for entry are designed to show you where they're most likely to fail, where that bounce is most likely to happen, where the market is most likely to contend or to continue with the large crowd. So this is rule number 3, and this is where the accuracy comes in, because if these cool kids fail 70 to 80% of the time, guys, it gives you the opportunity, the potential to win up to 70 to 80% of the time. So 3 rules, 2 charts, we're going to learn them. You're going to learn them. I already know them. I've studied these. You're going to learn the Fibonacci and the trigger rules for when it's okay to trade. Okay to trade. When is it okay to trade? Well, and this is such a Sunday school answer. It's okay to trade when your rules are met, because your rules are a description. That's all they are. It's a recipe. It's a description of a pattern that you're going to be able to prove wins more than it loses. So it's okay to trade when you have momentum, clear path, and entry. As a brand new user, this is your focus, giving yourself the highest chance of success. Eventually, it'll be okay when you have 66% of these, when you have momentum and an entry, or a clear path and an entry, or an entry. I said all the options, I suppose, or momentum and a clear path. And that takes you outside a high probability trend trade. But your ability to understand that your first trade is all three sets you up for the next one. You have the ability to simulate. This is where your work comes in. My job is to teach you these things, to have you reading your indicators. Your job is to practice, to try to take trades, to move your stops, to take the perfect entry, to learn how to manage it. And I'm gonna let you in on a secret right now. It's also your job to make some mistakes, to get out there, to take, I don't know, I won't say take some chances, but maybe have a misunderstanding, and that's okay. Lose a few trades, that's okay, it's part of it. Learn how to lose trades, that's an important part of it. But you can simulate. And the first step in becoming a confident trader, ASAP, has you posting your pictures in the room. So every time you take a trade, you're going to post a picture. And every time you post a picture, Bob, don't let me down here. You're going to tell me why. You're going to tell me what you saw. You're going to tell me why you did what you did, where you were coming from, what your advantage was. Where was your entry? Where was your exit? What were you thinking? Bob, this is beautiful. Thank you. And when you do that, it's a private session. You and I get together and we talk about what you saw. So you're describing your advantages. I'm making sure that you're reading your charts right. You're showing me your entries. We're making sure that they have the least amount of risk. You're showing me your exits. Do they make sense, or did you get lucky? Did you hold for a home run that wasn't happening? But we will go through it and we will celebrate every victory and we'll work together to correct any mistakes, guys. And that's going to get you where you want to be a whole lot faster. And then we're going to simplify. I'm going to give you a plan for the high probability trend trade from entry to exit, from rules met to management. And then that's going to open the door for a second trade, a medium probability trade, which is when most of your indicators agree, but there's an issue. You're going to be able to identify that issue because you're talking about advantages. So you might say to yourself, I'm looking at my charts and life is good, but dag nabbit, I don't really have a clear path. One of my advantages is gone. Let me focus heavily. Let me make sure the momentum is solid. Let me make sure my entry is defined. And that puts you in play for what we call a medium probability trade. And these have to be managed just a little more assertively. You're just trading patterns, recognizing patterns. So you've got to learn the looks you're going to commit to. You've got to learn the Fibonacci and trigger looks so that they're easy. And guys, they will become easy the more study you do. That's the second piece of the puzzle. The second piece of the puzzle to getting to where you want to be ASAFP is use the spreadsheet, guys. I give this to you every day. I update it nearly every day. And there's 4 tabs, and each of them are important. The first tab is what it looks like to have your rules met. What is my chart going to look like? What is the pattern when I have strong triggers, when my path is clear? Commit these 2 to memory because these are the 2 that are going to carry you next level. And also understand what it means to have weak triggers, when your advantage is gone, when there's a termination condition, when your advantage is gone. Because if you're committed to trading when the rules are met, it's important that you know the difference so you don't make those mistakes. There's the client trade section, and this is over 400 pictures of you guys using advantages, posting them in my room and finding a way to capitalize. When they're amazing, I steal them and I put them in this spreadsheet for other people to study. There's pinpointing your entries up here. There's super basic management that I'm going to give you in the plan. Opportunities to grow in your management, patterns that you're going to begin to recognize. Because the more you sit in front of the screen, the more you focus on advantages, things just start jumping out at you. So you're going to go to the build your plan and you're going to load this with your pictures. Every time the rules are met for a trade in your study, you're going to drop it into your personal trade setup. When you start looking for the next trades, you're going to do the same thing. As you begin to learn to manage outside of the very basics, start filling this up. And guys, every picture that you take for your spreadsheet, drop it in the room. Let's make sure that it's accurate. And then you'll begin to see patterns that repeat themselves all the time. And then finally, there's the trade tracking. The trade tracking sheet has a lot on it. There's your capture software. You should already have Capture or Snagit. Know how to take a picture, know how to annotate a picture. If you don't, I want you to raise your hand and we'll go through it. How to paste pictures into the spreadsheet, how to annotate your chart for the best feedback. And that's the one, guys. How do I annotate for the best feedback? Well, I talk about the 3 advantages. I say how I read my charts to make sure that I'm reading them accurately. I show you exactly where I got in. I talk about exactly where I got out to make sure that I don't have unneeded risk, to make sure that I'm not holding for home runs that aren't going to happen. So make sure that you're annotating. Whoops, wrong one. And then this is just a trade journal. So if you take a trade today, drop the picture in, talk about your advantages, but most importantly, talk about the feedback that you got in class. One of the things that was absolutely astounding to me when I started doing this is I was looking at a chart and I would have told you without hesitation that my read was perfect, my trade was amazing. And then I would present it in my brother's room. And he would say something clever like, hey, Mark, you traded directly into a termination condition. I was like, oh man, I didn't even see that. And then the next day, he would tell me the same thing. Hey, Mark, you traded directly into a termination condition. And I was like, dag nabbit, I didn't see it again. And that would happen 3,000-4,000 times. And what I had to do is I had to start coming back and looking what I did yesterday. Instead of believing that taking a couple bad trades was going to make me a better trader, I had to start to study these patterns. I had to go back and look at yesterday's trades and say, hey, what worked and what didn't work and what felt easy and what felt forced? What are the patterns bringing me success? What are the patterns taking them away? And if you do that little thing every morning, it prepares you for the day. It will accelerate the learning. And guys, all I need is 3 or 4 pictures from you, 4 or 5 pictures from you that are annotated with your chart read. And we'll know exactly where you need a little help and where maybe you're being too aggressive. Maybe you're being too passive. But we'll recognize your patterns as well. So what we're going to do is we're going to take the first hour of class and we're going to talk about these rules. We're going to learn them. You're going to simulate them. You're going to get feedback on everything. You're going to start putting them in your spreadsheet. The second half of class is dedicated to your chart reads. The pictures that you guys post in the room, I go through them in the order that they're presented, which brings me to you. Good morning, Lonnie. If you have to go to work and you have pictures that you want me to study, that you want me to look at before you leave, just go, hey, Mark, I have to be out of here at 10 a.m. Eastern. Do me a favor, check my charts, and I always will. I've had guilt the last 2 days, Lonnie, that I've gotten to your charts and you've already disappeared. So if you present, let me know. We'll go right into them. Typically, I wait until I'm done with the rules, but I don't ever want you guys to miss out on feedback. So we're going to learn them. You're going to practice them. We're both going to simplify. And let's get into it. What are we looking at when we open our charts? Didn't mean to call you out, Lonnie. I just want to make sure you're not missing anything. I think feedback's how you get to where you want to be. Your feedback yesterday is you're getting pretty darn good at this in your first week. And if you want to repost that one too, we can even get it. So every chart has trigger lines, guys. Large and small has trigger lines. If you start building more charts, they'll have trigger lines. They're in the templates. The only thing that you need to know about trigger lines is that these are the small, 2 solid lines working together. They're a small trigger line. These are the large, 2 dashed lines working together creates a large. It's fast and slow if you want to get technical. But when they're green, small, large are going up. When they're red, small, large, they're going down. That's it. Don't overthink it. Each chart will have areas. Areas have names. That's all we're doing is naming them. There's divergence high lines. It's a magenta line. There's divergence low lines. It's a cyan line. There's Fibonacci resistance. It's red. Fibonacci support. It's blue. There's yellow 1-to-1s. And there's a mid-band. And the mid-band's the only one that changes color depending on where price is. Above it, it's green. Below it, it's magenta. You're going to use these areas differently on either chart. You're going to use the triggers differently on either chart. But all you have to do is know the names. You don't have to know how to create them. You don't have to know the inputs. You don't have to know anything other than their names. So we're going to go through and use those indicators, and we're going to talk about recognizing a pattern that has been proven to win more than it loses in the form of the high probability trend trades. So large chart leads the way. Large chart, big chart, slow chart, broad stroke of a brush, large crowd, however you want to say it. Don't even look at that small chart until the large chart says go. And we're going to go define momentum. And the large chart must have strong trigger lines. And guys, the large chart defines direction too. And colors help. If the background is green behind that first bar, it's going up, go up with it. Is the easiest thing that you can do. If it's going down, go down with it. It's the easiest thing you can do. And these colors kind of come into play because the only way to have strong triggers in an uptrend is if the colors are all the same, green. And the only way to have strong triggers in a downtrend is if the colors are all the same, red. So let's define trigger lines. Strong triggers. It's in the word, guys. The only thing that's important are the triggers. The bars don't phase me. The key Fibonacci areas don't affect me. It's simply a comparison of the small and large. So in an uptrend, the small triggers are up and above the large triggers. The large triggers are wide. Guys, there is zero boogie in flat triggers. I don't know who I stole that from, but I love that phrase. These things have to be open up like a mouth opening, ready to feed. Or down, same thing. But it's that separation that happens between the small and large triggers. It's that gap that's created. Think of scissors that are open. When scissors are open, you can cut. Let's take a picture. Let's vandalize. Let's have fun today. When my scissors are open, when the separation is there, when the colors match, guys, that is strong triggers. When the scissors are open, when the colors match, when the space is there, that is momentum. That is strong triggers. That's rule one met, guys. Because when you have strong triggers, the odds are favorable for the market to continue in the direction of the trend. And odds favorable momentum is freaking amazing, guys, because odds favorable momentum pushes a market. It's like a loaded down freight train. Odds favorable momentum is what it takes to break those key Fibonacci areas, to be willing to take a shot at it. Odds favorable momentum, that's when I'm buying Fibonacci support on a smaller, faster chart. That's when I'm selling Fibonacci resistance on a smaller, faster chart. And then I think my favorite thing about odds favorable momentum is sometimes it can cover the mistakes that we make because it's hard to stop and maybe we trade into a termination condition. A lot of times momentum gives you a chance to manage out of it before things go bad. So strong triggers. Let's find a large chart real quick. I know I have one. Let's see what it does. Separation. Smalls away from the large. Notice how the market continues down. Notice how the key areas break. That's a good look. Separation is strength. There it goes. Breaks areas. Separation down. There's your strength. And then there's your strength. Is everybody good with that? Separation, odds favorable momentum, strong triggers. The word should inspire confidence. Well, when your scissors close, when the small triggers work their way inside of the large triggers, guys, this is weakness. So we have strength versus weakness. We have odds favorable momentum. You're going to see that in the room, OFM. And with weakness, anything can happen up or down, and that's not very confidence inspiring. Likely to continue in the direction of the trend, anything can happen. Potential to break key areas, anything can happen. Cover some of the mistakes we make, anything can happen. Guys, let the words make you believe that anytime those smalls are inside of the large, there's just no reason to try the next short, no reason to try the next long, because this is when key areas typically hold. This is when retracements typically come from the middle of nowhere. So strength and weakness, know the difference, because once you have strength, we're going to make sure there's nothing in the way to stop that loaded down freight train. And we're going to do that by making sure that terminations are false, guys, that there's no likely to stop the market areas in front of us. That's going to give you room to the profit targets, and we're just going to call it a clear path. Termination condition is a Fibonacci-based indicator that may, that might, that could, that has the potential to reverse the market. And it's based on a comparison of the area and the T3 trigger strength and location. So, horizontal lines. Good morning, Alexandra. Horizontal lines on a large chart. Glad to see you survive St. Patrick's Day in Boston. Good job. These are the areas, guys. These are those lines on a large chart. Support, resistance, one-to-ones, divergence low, divergence highs. That's it. They're just lines. Horizontal lines on a large chart. These are where decisions are made. These are where the large crowd is most likely to enter and exit. These are where the large crowd is most likely to fight. These are where reversals can happen. Big untradeable bounces. Decisions are made at these horizontal lines by the large chart, by the large crowd. So, to define a termination condition, two things have to happen. The first thing is we're going to let the large crowd get there. Price reaches the area. Dynamic Renko bars reach Fibonacci resistance. Dynamic Renko bars reach Fibonacci support. Once price reaches the area, we're done with price. The triggers will tell you everything that you need to know. So if price reaches resistance, I want you to ask yourself, where are my triggers? And if your triggers remain below resistance, resistance could create an untradeable bounce. Resistance could break. There could be a fight between buyers and sellers there. Or it could reverse the market completely. Large triggers go from green to red. And that makes it a strong top, which is rule number one for a couple other trades that you're going to learn eventually. But price reaches, where are my triggers? That's it. If they remain below, no trades into the area. The safest bet is waiting for the reaction rather than hoping it gives you the reaction that you want. And then from there, strong top because of the reversal, market heads down, price reaches Fibonacci support. And once it hits there, I'm done. I don't care about price anymore. My trigger lines will tell the story. So I have to ask myself, where are my triggers? And if my triggers remain above Fibonacci support could create an untradeable bounce. It could break. It could create a fight. Heck, it could even reverse it completely, creating a strong bottom, which is rule number one when areas only have the potential to break, which is rule number one for high volume area trades, for momentum trades, for the white bar breakout trade that John Novak used to teach, guys. It's not even a rule for the high probability trend trade, but when you're coming from a strong top or bottom, it creates a little extra advantage. So let's see if we can find an example of a termination condition. What do you say? Price reaches Fibonacci support and the triggers don't break. And sure enough, there's a giant bounce. Price reaches Fibonacci support, the triggers don't break, and sure enough, there's a full reversal. Price reaches resistance, price reaches a divergence low, hit support and bounced right to resistance and bounced. And guys, these things are where decisions are made, and you're going to know about them long before the market gets there. It's a great spot to get paid. It's a great spot to be patient. But areas break. I threw that into the mix. Areas break, and they break all the time, typically with momentum. So this is what it looks like when an area breaks, and these are the three possibilities when price reaches an area. First, all the triggers are below resistance, and resistance will be a termination condition even if it's for a moment. The highest chance of survival comes from doing nothing, because when you do nothing, you're saying, I'm going to wait for the reaction. I'm going to wait and see what the large crowd does instead of trying to predict what the large crowd does. The most broken rule among new and old traders is trading into a termination condition, forming an opinion that it should break. And guys, they never should break. They have the potential to, but they never should. So wait for the reaction. If both your small triggers and your large triggers, both line of each, get above resistance, resistance behaves as support. Resistance is now broken. Your path is now clear. It's not the price bars that tell me it's clear. It's the trigger lines. And once my path is clear, my path remains clear until I hit the next area, and then I go right back to number one. Once you can tell the difference between a termination condition and a clear path, it opens the door for your second trade. And number two here is what we call a 50-50 look. And this is going to be your medium probability trade, not high probability because your path isn't clear yet. But when your small triggers smash through resistance with odds favorable momentum, but your large triggers are lollygagging behind, this 50% above, 50% below look, there's where 50-50 comes from. It lets me know that this area has the potential to break. It lets me know that because of that momentum, the market may push through, but it's not clear yet, which means that if you take a trade, and you can take a trade, you just have to manage it assertively, because as often as areas break, even with the potential to break, they don't always. They don't always. They don't always. So, know the difference. Is it only potential? Is it an absolute termination? Is it a perfect middle of nowhere? I mean, once you know the difference between the three, guys, it opens the doors. Once you can say it is a term or a clear path, you'll be able to execute the second trade. Termination first, potential second, clear path third. Know the difference. Because there's going to be times when your path isn't clear because areas are stacked, because there's multiple fibs. Multiple areas are reached, and the large and small can't seem to break. Guys, this is 90% of your day. 90% of your day is going to be doing nothing because there's nothing to do. 90% of your day is sitting on your hands because you can't seem to get a clear path. 90% of your day is not entering the market, not taking what I call avoidable losses. Because with a little bit of study, you're going to realize that these hold more often than they break. This is an 11-hour run in November, guys. 36 times termination conditions won, 6 times they broke. I like my odds waiting for a clear path personally. Hopefully you will too, because the futures markets trade trillions every day. They literally trade billions of dollars every hour as exchanged. You have to make $400 a day to be a 6-figure trader. You don't have to be in every move. You don't have to be the first one in or the last one out. So is everybody good with that? Termination conditions, guys, they're the most broken rule. This is crude oil. Let's see if the S&P respects termination conditions too. What do you think about that? Weak triggers, right to resistance. Uptrend, market's going down, back to resistance, right to a divergence low. So what's the market doing? The market is literally telling you, your rules are telling you, guys, this is the range we need to break out of before you ever get a clear path. This is the consolidation where we're going to take everybody's money while the large crowd buyers and sellers fight. All you have to do is wait for that path to finally clear. Don't form an opinion, because look at that termination creating the move up. Is everybody good? You good with that? I hope so. That's the one that's going to save your bacon more often than it doesn't. Can you guys hear me? Is it just me? That's okay. Guys, large chart's a slow chart. It's a broad stroke of a brush. It's hard to see change on a large chart. And that brings us to the final termination we're going to talk about. 3 divergences in the same price range can terminate the trend, may terminate the trend, could terminate the trend, have the potential to terminate the trend. Notice that I don't speak in absolutes. I speak in terms of advantages. Guys, when your large chart is taking that one bar and you've got the best momentum and that area has the potential to break, you're like, I'm going to look for an entry. If you go to your small chart and you see 3 of those divergence lines, cyan from a low, magenta from a top, if you see them, you have to say to yourself, the small chart is showing me the inner workings of a bar that doesn't show change. They're giving me the heads up, and the heads up is, hey, we may push higher. We may reverse the trend. And guys, this is the only time when my rules are met on a large chart that I won't enter the market for a high probability trend trade. And if I'm in the highest probability trend trade, that actually is going to lend itself as an exit condition. When the advantage goes away, giving you the ability to manage out of a trade before losses or large losses are taken. So, rule number 1, large chart, momentum, strong triggers, likely to continue in the direction of the trend, sets the tone. It's rule number 1 for a reason. Rule number 2 is in play. Clear path, no terminations. Guys, I am a semi-truck. I am loaded to the gills. I have a tailwind, and there is nothing in the way. That's how I feel when momentum and clear path are in play. This is your foundation. And then once I have them, I'm going to find my entry. I'm going to a smaller chart, a faster chart, a refinement chart. And I'm going to embrace the precision of rule number 3. I'm going to use a limit order, which means that I'm going to wait for the market to come to me, and I'm going to use a limit order to buy or sell a pullback. That's that fight from the small crowd. That's that retracement that is counter to everything that the large chart says. And I'm going to have that limit order at areas, at a fib, at a midband, at a yellow 1-to-1. The same way areas on the large chart can stop the trend, the areas on a small chart can create a bounce to continue with the trend. But here's the key. They need to be inside of triggers. And when you write your rules on your chart, I want you to capitalize the word inside of triggers, because triggers will define where your retracement is most likely to occur. On your large chart, on your small chart, price typically returns to the large triggers. It doesn't have to, but more often than not it does. So your entry chart has the 5-1 large triggers. That's your small chart. You're going to use these if the scissors are open, you have odds favorable momentum on a small chart too. But it also has your 13-2 large triggers. We call these the synthetic triggers because they're from a different time frame. You'll tell the difference because they're stepped, but to be honest with you, you don't need to know the difference because price may retrace from the top line to the bottom line, whether it's 13-2 on top of 5 or 5 on top of 13-2. All you're going to do is you're going to say, oh my gosh, this is where the retracement is most likely to occur. If you want a more accurate approach, if you want less risk, if you want higher accuracy, allow them to be favorable large triggers. Favorable large triggers is when your large and synthetic are overlapping. When your large and synthetic are like two snakes riding piggyback, because what it does is it gives you the absolute smallest zone where the retracement is most likely to go. And then when you put a fib, a midband, or a yellow 1-to-1 inside of them, you have something solid, something bouncy for the market to hit. I want you to think about you have a tennis ball and you're throwing it as hard as you can. And you know that it's going to go until it hits something solid. And then you're going to get an equal and opposite reaction. Well, when your solid level is inside of the retracement zone, guys, this is when great things happen. So let's go define an entry. Remember, once the rules are met on the large chart, don't forego that one. There's some people in this room that'll tell you, don't even look at a small chart until the rules are met. Don't even open it up. Keep it closed. Get your momentum. Get your clear path. And then once you have it, you're going to look over to the small chart, and they're going to be screaming to the upside without you in this case, because my large chart is green. My large chart has strong triggers. My large chart has no termination conditions. So when everything is screaming up, the fear of missing out is going to start gnawing at you. You're going to start to feel, man, I'm never going to get a trade. This is horrible. I don't know what I'm going to do. And then the small crowd shows up. Then the fight begins, and you get a reversal bar. And once you get this reversal bar, guys, this is the beginning of the retracement. This is the beginning of the fight from the small crowd. You need to identify where that fight is most likely to go. Ron, I love that Morgan beat you to the punch on the post. From the top line of the large triggers to the bottom line of the large triggers, this big white box, this is where the retracement may occur. I always did. It's no secret. Oh, he got it, you didn't? Is everybody with me? When the rules are met, wait for a reversal bar. When you get the reversal bar, we're going to define where that retracement is most likely to go using the large triggers. And then we're going to make that box smaller by defining where it's most likely to bounce. Areas inside of the large triggers. Areas can be fibs, midbands, or yellow 1-to-1s. And there's that all caps inside of triggers. And that great big zone turned into a much smaller zone from the highest area to the lowest area, guys. This is what we call the window of opportunity. The window where the small crowd is most likely to fail. This is the window where the market is most likely to bounce and continue with the uptrend established on the large chart. With a little bit of study, you're going to get confident. With a little bit of study, you're going to have trust. With a little bit of study, you're going to be willing to activate a limit order 2 ticks above your highest point of support inside of those triggers. And you're going to say to yourself, with all that momentum on the large chart, with that clear path on the large chart, I know where the small crowd's most likely to fail, but I'm going to catch them on the way there. I don't want to stumble over a couple pennies hoping to save a few dollars. And at this point, you've done all you can do. You can't control whether or not you get a fill. You can't control whether or not you take a winner or a loser. The only thing you can do is wait patiently and hope that they get to your entry, because that is the highest probability spot for entry. If they do, you're in a long position. The large chart has the advantage of a market where the trend is likely to continue because of strong triggers. The large chart has absolutely no Fibonacci areas in the way, no decision-making points to create a bounce. And you have entered precisely where the market is most likely to bounce and continue with the trend, guys. You can't control whether or not you get the fill. You can be in control of whether or not you have these advantages when you enter. And guys, this is your high probability trend trade entry. This is your trend trade entry. You'll use the same idea for medium probability trend trades. So learn the recipe to identify where the market is most likely to continue. Reversal bar begins the pullback. It's not your entry. If you enter at the time of the reversal bar, my goodness, that's a long way to the correct entry. Once the reversal bar prints, you'll identify where the retracement is most likely to go, somewhere from the top line to the bottom line of the triggers. And then you'll create your window of opportunity, the area where the market is most likely to bounce and continue. And that goes from the highest point of support to the lowest point of support, all caps once again, inside of those favorable large triggers. This is where the market is most likely to bounce, where it's most likely to continue. Any line on the wrong side of the triggers, and I define the wrong side of the triggers as below the retracement zone for a long trade. Because once I get to the other side of these triggers, once I get beyond the areas most likely to create a bounce inside of those triggers, my advantage is gone. I'm not looking for entries from the wrong side of the triggers because I don't know if or when or where that market may continue up. This is what we call the wrong side of the triggers, and any line out there is not where you want to enter a trade. Reversal bar starts the pullback, not the entry. But you can define where the retracement is most likely to go using the trigger lines, and then you can define where it's most likely to bounce by the areas inside. Guys, there is one area inside of favorable large triggers in this picture. Your limit order went 2 ticks below it, and you waited for the small crowd. And here's the deal. You have the same scenario right here, but they never got you. This is not your money. But they came back for you, and this happens a lot. Remember, you're not the only one trading the market. There's thousands and thousands of people hoping it hits the mid-band, hoping it continues down. You're just trading one pattern in a giant sea. Anything on the wrong side of the triggers, beyond the retracement zone, beyond the areas most likely to create a bounce, it's not part of your entry equation. You don't know if, when, or where that market's going to reverse and go down. So all of these lines, all the fibs, the one-to-ones, it's not a part of your window of opportunity. This is actually where the market should not go. And that's how you're going to define your initial stop placement. Once you can identify where the market is most likely to continue, you understand where the market should not go if that's going to be part of the 70 to 80%. You can identify where the market should not go beyond the retracement zone, where the market should not go beyond the areas inside. And your initial stop will be 4 to 5 ticks above that highest trigger line, below that lowest trigger line. And you're going to taunt the small crowd and say, if you want my money in this position, you're going to have to come get me. You're going to have to break through everything that's there to stop you, and I will willingly take this loss. This is a good loss. This is a loss from a pattern that has been proven to win more than it loses. This is a loss that's going to happen 20 to 30% of the time. It's a normal part of a positive equity curve. So all you need to do, brand new users, is be able to identify momentum, to commit to it, to have that advantage, to be able to recognize a clear path, to be able to commit to it, to have that advantage, to build that recognition. When you have it, market's trading way up here. Fear of missing out is real. Then the pattern presents itself, the entry pattern. The reversal bar prints. The triggers are overlapping. There's areas inside. And guys, this is what it looks like together. So on a large chart, when I have odds favorable momentum, on a large chart, when I have a clear path, I can scroll back 10 days worth of data. I can scroll back and I can say, man, there is the potential to break. There's odds favorable momentum. There is that tail that we talk about. And let's see, just for grins, what that tail looks like on a smaller, faster chart. I'll be damned. It looks just like a pullback to an area of resistance inside of favorable large triggers. Can everybody give me a why? Because what we did is we just learned how to study. When I have momentum and the potential to break, I'm looking for an area of resistance inside of favorable large triggers. But Mark, there's a blue line. Guys, terminations are defined on the large chart. But Mark, the triggers don't match. Momentum is defined on the large chart. Check this out. This is your refinement process. I'm going to put a box around that one bar. Bottom of the bar, top of the bar is that tail. We're pinpointing where it's most likely to happen. And then that bar continues down all the way to here. The next bar doesn't even print until you are 6 points into this trade. It's the refinement process that reduces risk. It's the refinement process that increases profit potential. Guys, this is your pattern. This is where you got to take a picture. So when you present in my room, left click, drag down, give me both charts. It's a perfect 50-50. And I want you to get in the habit of doing this. Right where your trade is, tell me you had odds favorable momentum, or tell me that you didn't. Right where the trade is, not back here. I don't care about it back there. Right where the trade is. I want you to say, was it a term? Was it a 50-50? Was it a clear path? Because what happens is if you know this is a clear path, you might have to manage assertively, right? And I want you over here on your small chart, I want you to say, pull back to area inside of triggers for entry. And what are you doing? You're telling me what your chart read is. You're telling me what you saw, how you read it. You're showing me where you entered. You can even show me where your stops are if you want. You can show me where your targets were if you want. We'll talk about all of it. But guys, this is the perfect trade. Upload it to Screencast. Go to your personal trade plan. Drop that link in there. And put something clever like never miss this one. Because that is the best of the best, guys. And that's exactly what we've talked about this morning. 100%. And it happened, what time is it now? It's 9:49. That happened at 9:36. That is 13 minutes in the past, which means that I'm not hand-picking pictures trying to talk you into a methodology that I'm not sure about. It means that I'm going through and I'm just searching. There's one, potential to break. And then before it, there's one, clear path. So let's go find those tails, guys. This is how you're going to develop some trust in this methodology. There's my first one right to the mid-band in the retracement zone. There's my second one right to the mid-band and a fib in the retracement zone. Notice that they never got where the market shouldn't go. Guys, this is a pattern that repeats itself all day. This is a pattern that is recognizable, that is repeatable, that can be verified and proven. You've just got to learn the looks so you're confident catching it. And this is where I give you everything you need to be successful with the software. It starts with trying to convince you to take a lot of pictures. Because pictures, guys, there's no stress in pictures. There is, even on simulator, adrenaline associated with trades. So I'm going to encourage everybody this afternoon, if you haven't already done this, break this into fifths. And the goal is that you look at the large chart. The goal is that you recognize momentum and path. That's the core, guys. That's the two that are going to carry you places. That's the core of your education. And once you understand those two, momentum and path, it opens doors for the rest. So I want you to take 25 pictures. 5 pictures a day for 5 days. 25 pictures each of strong triggers, weak triggers, clear path, termination. And then don't just take the picture. I want you to take the time to annotate them, guys. I'm a huge fan of language, and it's been proven, follow the science, it's been proven that when you look at something and there is a phrase associated, there is an advantage associated, you create the correlation between what you're looking at and what it means to you. So every time you see strong triggers, there should be this loud voice in the back of your head that says you have the advantage of a market that is likely to continue. It is strong triggers because of the separation, because of the colors match. Guys, make it easy. Post them in your spreadsheet. Study them each day until these two rules become easy, simple, fast. And then you'll go and work on your advantage of entry. So I'm going to give you this. I'm also going to give you the high probability trend trade checklist. And guys, this is the best of the best, highest probability way to take this high probability trend trade. And it starts from a strong top or bottom. It's not a rule. But when you have a strong top or bottom, a no triggers through termination that reverses the market, a no triggers through termination that reverses the market. Are you asking, what is that? Joel, help me. Sorry. Do I want to see your failed trades? Hell yeah. Joel, because something doesn't win, does it make it the wrong trade? This is a hard lesson for new users. Thank you for saying that. Let me show you something. In the client trades, Jose's perfect high probability trend trade short. It made it to the study guide because it had odds favorable momentum, because the path was clear. He took the perfect entry and a stop makes sense. Joel, it's not the result, it's the process, because all it is a pattern. It's a pattern that's been proven to win more than it loses. Here's another one. Perfect trend trade long didn't work. I am so adamant about focusing on the process. Whoop, that one's not available. That one didn't work to an extreme. It canceled out the picture. But even recently, I want to say, Trina's perfect high probability trend trade didn't work. Odds favorable, clear path, perfect entry, perfect stop. So Joel, what happens is when you post this picture in the room and you're like, man, this sucks. I can't believe I didn't get the trade. It didn't win. I followed the rules. And you're beating yourself up. I say, Joel, this is it, brother. This is every advantage that we hope for. This is a pattern that's been proven to win more than it loses. And losing these trades is the best loser you could ever take. And every 10 of them, you're probably going to lose 2 or 3 of them. And you don't get to pick which 2 or 3, which is why being consistent following the rules is so important. Thank you for putting that in the room. Even the failed trades are good trades if they follow the rule. Mark Douglas, who's big in the psychology, he's no longer with us, but he was a guru in trading psychology, had this analogy where you weight one side of a coin and you know that it's going to land on heads 8 out of 10 times. That's the scenario that it creates. Would you ever bet tails? Joel, would you ever bet tails if you know every 8 out of 10 times it's going to land on heads? Of course not. That's what this is. That's what this pattern is. You have to understand that you will take a hickey every now and then. You have to understand that every trade probably won't be a winner. Guys, I'm 66% for the day. I took a loser and 2 winners today. That's just a part of trading. Be okay with it. Momentum is always momentum. Terminations are always terminations. Clear paths are always clear paths. Keep it very simple. Define your entry. Know where to put your entry. And guys, that's pictures of everything you should be taking pictures of. And then this checklist is the best of the best way to take the trade. And nobody in the history of this checklist has ever done worse than 70% if they were being truthful with their rules being met. But if they said they were coming from a strong top or bottom or weren't, you can't expect the same results. If they said they had momentum, but they didn't, you can't expect 70 to 80% just because you said it was true. It has to be true. Areas inside, no termination. So guys, print this out, learn how to police yourself, and write these phrases on every chart you take a trade. And eventually you'll never wonder if you took the right trade. You'll have verbal proof that you're in the trade that wins more than it loses. And that brings us to the KISS plan. The KISS plan is a stepping stone in your learning journey. This is the first trade, not the last trade. It's not your get-rich trade. Thank you, Ron C. This is the trade that teaches you to recognize your get-rich trade. Or this is the plan because you have a ton of patience and you don't mind waiting for the best of the best, guys. It's designed to optimize your chances of success with the high probability trend trade as a new user, as you learn to read your indicators. Through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. Guys, class feedback is underlined because what if you take the perfect trade and it loses and you try to change your plan, Morgan? What if you take the perfect trade? You stayed 4 hours yesterday for a trade? Right on. What if you take the perfect trade and you think it's wrong? Class feedback will let you know that it's right. What if you take the wrong trade and you think it's right? Class feedback will let you know. Guys, my job is to tell you what you did right or wrong, what you read right or wrong. 4 hours yesterday for a trade, Alexandra? I like it. You'll be empowered to create your own plan when you can read the indicators, guys. So there's 2 things you have to know before you sit down and you're not on sim. Alexandra, when you wait 4 hours, I would encourage you to go back and do that tail circle drill and see if you missed an opportunity as a new user, because sometimes you have. So before I enter the market, and I'm not on simulator, was up 4 a.m. today for a trade? Right on. I have to know why I will enter the trade. And the easy answer is because my rules are met. Because rules, all they are is a description of a pattern. And that pattern has been proven to win more than it loses. And if you prove it, if you don't just trust me, if you go back and circle those tails, if you learn these rules, if you try to prove me wrong, guys, you're going to be confident. And there's no reason you'll ever miss the trade when the rules are met. Your rules really do help the emotion of trading because you'll never know what's going to happen next. You'll never know if you're going to win or lose, but you can know if your rules are met. And then the other one is, why will you exit? Why will you exit your trade? Paul, I would love it, and I'm not trying to give you a chore. I would love it if you would write why on your chart. If you would take the time to type out why you're doing what you're doing, just because it's an education room. That chart's awesome for trading chat. For this room, I love the annotations if you don't mind, man. The other side of it is, why will I exit? Well, exits are taken at profit targets or when the advantages that you had to enter the trade are gone. So if I enter a high probability trend trade and it goes beyond the retracement zone, it goes beyond the areas inside, my advantage is gone. Rule number 3 is no longer in play. I choose to exit that trade instead of hope. If I'm in a trade and 3 divergences print, I choose to exit that trade because my advantage is gone. Guys, management is where money is made. The entries are easy. You guys will have the entries in the first few days. Management is where money is made. So define your entry, follow a checklist, give yourself the highest chance of success. And then you have to manage it. And guys, the management plan here in the KISS plan is super, super if-then. It is 100% rules. It's designed to teach you where to put your stops. It's designed to get you paid as soon as possible. And it's based on 2 contracts. So you're entering the market with 2 contracts. It's nothing but if-then. If I enter the market 2 ticks below resistance. Good morning. Had to use the barter system of donuts for trash. I love it. I love the barter system. Was that your employees or the trash guys to get you on a day off? I had a mechanic in town here that I used to trade tattoo work, and he put a lift on my wife's Jeep for me. It's a pretty good trade. Nice. Guys, if the entry is 2 ticks below resistance inside of triggers, then the initial stop is 4 to 5 ticks beyond the triggers. Guys, this is where the market should not go. If you try to beat the system and put your stop below resistance inside of triggers, you're likely to get hit and watch the market run without you. If you put your stop in the retracement zone, you have the potential to get hit and watch the market run without you. So, where the market shouldn't go. But you're going to know your risk before you ever enter, which means that you can make the decision on whether or not you're willing to risk. And in this case, $150 per contract. Paul does a great trick, and we're going to talk about his. Thank you for that, Paul. And this is a great example, and I'm going to show you the process that comes through. Is you'll say to yourself, this is a great look, but it's not perfect. Because it's not perfect, I'll choose to enter at the top, not the bottom of the window. Right? And that's your right. If the risk at the mid-band is too high, there we go. If the risk at the mid-band isn't what you're willing to risk, you can say, well, I'll get in at the top of the window. But Paul knows it. Paul knows that he runs the risk of missing the trade. He's willing to miss the trade, and that's the most important thing. He's willing to not enter this trade if it's not met on his terms, and that is brilliant, and that's a confidence in trading that you will get. So targets are predefined at $100 and $200. Paul, that was such good timing. Thank you. So here's the deal. If it doesn't hit your stop, and it will hit your stop. Guys, how often in a high probability trend trade is it likely to hit your stop? Does anyone remember? Nobody likes to admit it, though, because it sucks to take losers, right? It's the end of the world. 20 to 30% of the time, guys, you're going to get stopped out easily. If you don't get stopped out, you're going to get that. I like that, Boaz, you averaged it. You're going to get that reversal bar in the direction of your trade, and you're going to redefine where the market should not go. That $150 worth of risk is now $30 worth of risk because you're 2 ticks above that reversal bar. Or in a long trade, 2 ticks below. This is your first stop placement. It's redefining where the market should not go. It doesn't guarantee a winner, but that's a pretty insignificant loss if it results in a loss. If it doesn't result in a loss, well, then you made it to your first target, guys, and it's only $100 away from your amazing entry. So, if price reaches your first target, 1 contract is automatically pulled off. Those funds go into your account. You're a winner now. Your sweaty palms are drying up, and your pulse is subsiding, and the butterflies in your stomach are on their way migrating to Mexico, guys. And with 1 contract remaining, you're going to move your stop to break even. And you're going to say something clever like, I have no risk on this trade and profits have been taken. And my large chart has momentum and a clear path. Let's see what happens. And guys, even if they get your break even stop, it's still a $100 winner. But if they don't, it goes $200 in the distance, which means that you just had a $300 trade. And I like to post this because there's something about you guys. You don't believe $300 is enough. Guys, $300, if that's the best you do every day, is a $75,000 year. But here's the other part that people don't think about, is that wasn't $300 for the day, guys. That was $300 in 7 minutes, 6 minutes of your life. That was 6 minutes out of an 8-hour trading day. That was a $300 winner. So the goal isn't to make all the money every trade. The goal isn't to take chances because there's not enough opportunities. The goal is to hit your daily goal and shut it down and let it be consistent each and every day. Make the money you need to make every day and then stop. And you'll find that you will have only been in the market maybe 30 minutes for the day. Maybe active 30 minutes of the day. So I'm going to give you guys everything that you need to be successful with the software. I've already given you the spreadsheet. I'll drop it in again. This is your study tool, whether it's old clients using it or whether it's you building your own plan. I'm giving you the all you need zip file, guys, and inside of that zip file is every Word document I've just shown you. High probability trend trade checklist, KISS plan. It is the chart reading 101. It's also the PowerPoint that I use to teach. Inside is also everything that we talked about in the first hour, consolidated into 2 simple pages. And then finally, as we go into the second half, I think this is important. The pictures you can take, guys. I mean, you can take whatever pictures you want. These are the pictures I take, and I've found them to be so instrumental in my learning that I wanted to share it with you guys. I take pre-trade pictures. So I will take a pre-trade picture before I ever enter the market. I'll take a picture of exactly where I'm entering the market. I'll take pictures waiting for entries, whether I get them or not. I'll take pictures of stop movements, of profit targets, of why they're profit targets. I'll take pictures of everything, guys, and then I'll piece them together. So I'll take pre-trade because I'll go back and make sure I didn't break my rules. I'll take during the trade because I want to work on management. I'll take after the trade where I annotate it. This is what I had, this is where I entered, this is why I entered, this is where I exited, this is what I'm going to study to make sure I can repeat it tomorrow. And then, guys, my favorite is no trade. When you take a picture of a market that isn't giving you what you need instead of taking the trade, you're doing 2 things. One is you're not taking an unnecessary loss. You're not just giving money away, hoping it does something for you. But you're also reinforcing that rules are your lifeline, that rules are patterns, that rules are proven. And it's your job to follow rules. And that's where longevity comes in as a trader. The most successful people you'll ever see in this room, the other room, they're all doing the same thing over and over. If you look at Paul's charts every day and you went back 5 months, one thing you would notice is that all of them have momentum. All of them at least have the potential to break. And almost every entry he's ever taken comes from an area, 99% of the time they're inside of triggers. So, and his management is consistent, the same way his entries are consistent. So number 3 and 4 are the ones that you're really going to vandalize a little bit. Those are the ones that you should present in the room because we're going to take your trades and we're going to make sure that your chart reads were right. And that's what we're about to get into. And we're going to take your no trades and make sure that you didn't create your own rules, that you didn't trade or change the plan based on a misconception, based on something that you made up. So if you said, I'm not taking this trade because it's a termination condition, well, then we can say, hey, look, it had the potential to break. I'm not taking this trade because there was a fib in 1-to-1s. Then we talk about where the terminations come from. I'm not taking this trade because the small triggers turned against me. We redefine where momentum is defined. So sometimes your no trade pictures are an opportunity for you to find more trades. So you're going to get you have all that stuff. You have everything you need at this point. I see somebody is messaging me in Discord, guys. I'll check it on my break. I don't check it in class. I don't have the attention span to do that. So let's review that first hour. We learned the trigger lines and the Fibonacci rules for when it's okay to trade. We broke them down individually. We talked about how to identify them. We talked about what the advantages mean to you or what the disadvantage means to you. And I gave you some place to study it. You have the ability to simulate and to request feedback for 3 hours or every day, 15 hours a week. You can have a private session with me. All you have to do is post in the room. And what we're looking for is making sure that you have the correct rules, that you have those advantages, that you understand them. I've given you a plan. Guys, that KISS plan had 2 trades in it. It had the high probability trend trade and how to manage it step by step. It includes that 50-50 medium probability trade. And you'll notice that the rules are different, that you have to have a strong bottom, that divergence on the small chart is detrimental, so much so it mentions it 3 times. It's also a different management plan. So until this trade becomes easy, it's okay to put this one on the back burner, but you do have 2 trades. And guys, that KISS plan has been used to fund accounts for new users in the first 30 days with those prop firms. You have the spreadsheet so that you can study the looks so that they're easy. Guys, the only thing that you don't have at this point is experience. The only thing you don't have at this point is the repetition for this to seem easy. And then I'm going to give you this as we go into the second hour, and then I'm going to take a break. The key to everything we do is having a foundation. The Japanese philosophy of Kaizen says that your goal should be to get 1% better every day. Guys, have your foundation. Get 1% better every day. Get 1% better at identifying advantages. Get 1% better at finding your entry. Get 1% better at managing your trades, guys. Just a little bit. So for you new users, I blanket with very conservative rules. I know that I do. We talk about recognizing advantages, and I hand you a solid plan that optimizes your chances of success as you learn to read your indicators. So if you're brand new, I'm giving you the golden goose right now. I'm giving you the highest probability of success. And the reality is, for you new users, it feels like a termination condition is the worst thing that you could do. No momentum is the worst thing you could do. No areas inside of triggers is the worst thing you can do. And as a brand new user, it probably is, because you're likely to lose more when you break those rules, which means that your confidence isn't there, which means you're less likely to stick with such an amazing program. But these blanket rules are there because it increases the likelihood of success, because it increases the probability of confidence. And they're not always bad, but until you have the experience to know the difference, it's just safer that way for you. So just like anything, the more time you spend with it, the more you see. And this opens doors. Recognition comes through repetition. So learn the process that yields the results. And Joel, that's what I was saying to you. Learn the process that yields results. Learn to trust the pattern. And if you focus on the results rather than the pattern, it's easy to go sideways. The results seem to follow when the process is followed. That's where the KISS plan comes in, guys. If you keep it that basic, if you follow simple rules, and most importantly, and this is for going into the second hour, if you're okay not looking for all the trades, rather just the best trades, you can find an extraordinary level of success. You're going to see people in this room taking trades that don't look anything like high probability trend trades. That's okay. They learned to read their charts and they've started recognizing patterns. You will too. Been watching this over the years, guys. So the further you new users deviate from the simple, the longer it's going to take you to be comfortable with the patterns that are proven to win more than they lose, because you're going to keep throwing variables in the education mix. Keep questioning everything. I encourage it. I want you to question it. And guys, I want you to challenge me. If something I say doesn't make sense, I want you to force me to prove my point. I want you to say, Mark, I don't get it, man. Go back, say it a different way. But I also want you guys to give yourself a little grace, because you are new. And learning something new isn't always easy, and we all learn at a different pace. It's okay to be new. Some people jump in and they're just freaking rock stars in the first week because they're built that way. Some of us, I'm one of them, will break rules for 3 to 6 months until we finally get sick of breaking rules. So give yourself a little grace, guys. You're new. It's okay to be. I'm going to go take 5 minutes. I'm going to stretch my legs. Yeah. And when I come back, we'll look at the live chart every now and then, directly into a termination condition. And no, we didn't run. We didn't get any storms here. It has been absolutely gorgeous here. It has been amazing here. So, where did they go through? Or maybe we did a week ago, I think. Maybe it was a week ago we got hit by a storm. I don't know. I might have been asleep. I might have been asleep. You got a little rain? Little rain's good. We're like 80s and sunny now. So tomorrow's FOMC, tomorrow's golf day. Guys, I'm going to go and refill my water and stretch my legs. When I come back, we're going to start looking at all the pictures that were posted. And Wayne said his only picks today are no trade picks. It means Wayne can't find a time when his rules are met. Not to the point to where he'll take the trade. But I'm going to tell you guys, no, look at this. Odds favorable, potential to break, 3 divergences in the same price range. Big ugly push. Crazy, isn't it? If you took the trade, small chart told you to manage. And this is what we're going to do is we're going to go through and look at all these. So when I come back, that's the plan. Post them if you got them. Ask questions if you have them. It's you guys that make this class amazing because it's your questions. It's your posts. It's your needs and my need to explain it that sets us up. So I'll see you in about 5 minutes, guys. I'm back. Did anybody notice that the large triggers never got through the divergence line? Did anyone notice that divergence printed? Less than ideal. Did anyone notice that it came from a bad top, not a termination that reversed the market? Jen, you didn't take it because it wasn't perfect, right? Because your money's worth it. Choppy chop fest. I like it. All right. So I'm going to scroll up to the top, guys. We're going to start looking at some pictures. See what you guys are doing. And this is Exhibit A. This is Wayne saying, check it out. If they're not going to give it to me, I'm not going to try to take it. No room, wake up pick, no clear path, no clear path. Just, he's like, man, my job is to make money. And if the market's not going to make it easy, I'm not just going to hand my money over to the market. Guys, avoidable losses. Avoidable losses are what drain accounts. Avoidable losses are what take the goodness out of the great wins, right? If I win $500 and I give back $600 in avoidable losses, I'm down no matter how great those wins were. So I love this picture, Wayne. And guys, this is a great one. He just said, I don't have a clear path. I'm not going to take a trade. And then Pete, weak top, price reaches support, price reaches support, price reaches a mid-band. All the triggers remain above, so 3 termination conditions, and we have what's called the gap theory. So ladies and gentlemen, there's this phenomenon that when price reaches an area and the large triggers are a full bar away, they're right at that reversal bar marker above, price is more likely to close the gap to those triggers, even more so if the market's not coming from a termination condition. So guys, does everyone see it? The momentum is awesome, right? But not at all 50-50, not even close to 50-50, because price reached support, triggers didn't break, triggers didn't break. Guys, can you give me a why, new users? He's calling the 50-50 on this fib and ignoring the termination conditions below it. This is common. This is why I show you guys that picture of how there will be times when your path isn't clear because the areas are stacked. And guys, when you trade directly into termination conditions against the gap theory, even with a great looking entry, you're more likely to get run over than not. And that's exactly what happened here, guys. And that's, good Lord, 5, 10, 15, that's 20 contracts. That's a big hickey. That's an avoidable loss, is exactly what it is. That's almost $2,000 worth of losses that never had to happen by not trading into the termination conditions. So Pete, thank you for sharing that. And then Joel, why do we share losses? Because sometimes you have to be reminded that even though that has the potential, this one does not. And Pete is an absolute gem of a human being for being willing to show that loss in the room. Thank you, Pete. It's not easy. It's not easy to do that. It's not easy to make yourself vulnerable in front of a room full of strangers, but you take that trade every time. And that's fine, right? That's your right. And there's no way on God's green earth I would ever consider it. And that's the beauty of it. Because it works for Pete. It doesn't work for me. It doesn't matter what I think of his trade. That's Pete's trade. Pete, you win that one more than you lose, right? Otherwise, you wouldn't take it. It's just not a part of my plan. And guys, Pete's an outstanding trader. But this is why I tell you guys, don't try to do what you see in the room. 75%. That wins more than it loses. That's a great thing. I err on the side of conservative. All right. Let's see what we have. Weak bottom because it's not coming from a termination condition. Odds favorable momentum all day long. And he says clear path, and he's showing me at the circle, right? So We get above it. There's momentum. There's the circle. And hold on. Let me see. This is this one down here. Pull back to support right inside of triggers. It never even blinks. So you keep it going. And then you get out at the second divergence. Absolutely beautiful. Momentum and path. Pull back to support inside of triggers. Easy money. And then it's not so easy. Then it is momentum and path. But the entry's not perfect. Does everyone see that? Let me make that bigger. Large chart says look for your trend trades. Small chart says you don't have an area inside of triggers. Does everybody see that on the entry? It's a great lesson here. He could have guessed that it was the mid band. He would have gotten run over. He could have guessed that it was the one-to-ones. He would have gotten run over. But Bob, this is brilliant. Bob says, check it out. Let the market go in the direction of the trend because the large chart says we're going. You get in a little late. I'm in on that reversal bar. I'm in on the confirmation because it gives me some place to put my stop. And then you take it up to the fib and it's beautiful. So if the large chart says that everything is good, but the small chart says it's not, it's okay to insist on a reversal bar if you're willing to take that medium probability trade. You did it really well. Nicely done, Bob. Strong top, odds favorable, potential to break. Pull back to the mid band inside of the retracement zone. And you just ride it all the way down to trouble. Absolutely beautiful. What's interesting, Lonnie? Talk to me. The idea of confirmation? I talk really loud. Sorry, guys. That one? So check it out, Lonnie. Momentum and path leads the way, always. Momentum and path leads the way. This is why I ask you guys or suggest that you speak to yourself in terms of advantages when you looked at your chart. So what happened there, Lonnie, is Bob looked at his chart and Bob said, I have the advantage of momentum. And this is amazing. And Bob said, my path is clear as day. That's amazing. And when he looks for his third entry, whoops, well, I could do that. He says, I don't have an entry area. So the thought process is, my large chart is perfect. My entry is difficult to pinpoint and know where the stop should be because it's already where the market shouldn't go. I will force the market to give me a reversal bar in the direction of the large chart advantages. My entry's not perfect. I'm going to force the small chart to give me a reversal bar because what does it do? It gives you something to put your stop behind. Does that make sense, Lonnie? So once you know your rules well enough to identify them, you can still say, this is beautiful. That's not perfect. Let me force confirmation. And then it becomes a medium probability trade because you're on the wrong side of the triggers. But nothing ever changed. I mean, it just zipped right to his targets. Good stuff. And then same thing here. Just absolutely beautiful. And let's see what happened here. Odds favorable. Clear path. He did have 3 divergences. But his small triggers and his large triggers get above this divergence. So Bob, here's the lesson. The new user says, oh crap, I have 3 divergences, no trade. Bob said, well, when the small and the large get above an area, the area is broken. That's only my first divergence. That's only my second divergence. And with the perfect large chart, and I mean perfect large chart, you couldn't talk me out of taking an entry in an area inside of triggers because the likelihood of success is exponential. Bob, you're killing it today. And then there's the exit. And because it was a termination condition, so check this out. Everything is up, and Bob says, I'm not going to trade into those one-to-ones because my job is to wait for a clear path. So what does he do? He lets the market dance. He see all the indecision into the termination condition. And then when it gets above that decision-making point, Bob says, I'm in. Let me take that momentum and path up to the next area. And that is the patience. Ladies and gentlemen, that is the patience. I won't trade into an area, but if we get to the other side of it, I'll look for an opportunity. Bob, you are putting on a clinic today. Nicely done. Bob, how long have you been with Nexgen now? Where are we? Like a month? Month and a half? 3 months. Man. That's not bad for 90 days. And now it's just rinse and repeat, right? Hold on. I think you put a figure on there, didn't you? Another $550. Up $1,200 in 2 trades. Bob, go play golf. Great job. Rinse and repeat. But Bob, you got there because you're willing to ask questions. You got there because you're willing to post charts. You got there because you're willing to accept the lessons from the charts you post. I really do. I get giddy when I watch you guys really start to reel it in and find your groove. Because we know it can happen, right? We know it's good. All right, Morgan says this is a strong top. Price reaches resistance. None of the triggers break. It reverses the market. That's awesome. He has odds favorable momentum. He has the potential to break. There is no divergence. It's a perfect entry. You were trying to drag your sell order down. Couldn't get there in time. Oh, but you nailed it. Guys, that's the trade. That's the same one that we did together in the room. Morgan didn't catch it, but he still took the picture to remind himself. And Bob said, stick to the plan. Were you guys with me last week when like 5 people in the room said, man, once I started following the rules, I started winning? I started winning more? There's a reason, guys. This is one of my favorites too, guys. This is called the chili dog. This is a trade that Ron was nice enough to invent and share with you guys in the room. And he has accepted the burden of teacher now and then that he doesn't have to. But everything is momentum and path. But his trade defines path a little differently. You followed the plan, Alexandro, and found success? I'm telling you, guys, that's it. We all know it. Is anyone other than me prideful and opinionated, and some days you want the market to bend to your will? I still have days like that. I'm working through it. So guys, if decisions are made at key areas, nice. If decisions are made at key areas, Ron says, let me get price below the key area. So he lets the back of the bar clear that line. That's a big part of it. And then he's got all the momentum in the world and room to a target. And Ron says, I'm going to find a way to capitalize. But you know what? It's only momentum. It's not a high probability trend trade. It's just momentum. And momentum stops every now and then. So I'm going to take really quick profits. And I'll wait for the next one. And it's brilliant, taking what the market gives him. Never saw these trades until after he learned the high probability trend trade. Thanks, Nexgen. And you know what's true is I tried to replicate his trade without an understanding, and I got the ever-loving crap kicked out of me for about 20 days until I finally asked for help. True story. It looks simple, guys, but there's more to it than just jump in. There is more to it than just jump in. Hey, Sid. Sid's like, Mark, I know you're old and your eyes are tired. Good luck. Are you mad at me, Sid? So let's see. You entered triggers up momentum and clear path. So I have to say, Sid, no, you didn't, brother. Because every one of your triggers is below all of these fibs. You don't have momentum, nor do you have a clear path. Does that make sense? You have a market where price reached these areas and all of your triggers are way below. Even your large triggers are still down from a bad bottom. Where was your entry? 50? Was this your entry, Sid? There's probably more back here. Because where you're pointing is below the mid-band, below resistance, below the mid-band, below resistance. So your entry was somewhere around here. It's hard to tell. So why did you do it, Sid? Why did you go long in determination conditions without momentum? Because it was green? Because you had a mid-band inside of green triggers even with these down? So, and it doesn't matter. Your answer isn't for me, it's for you. Sid, what are the chances you're going to win a trade without momentum directly into a termination condition? Right? There's a termination condition that held. There's one that held. There's one that held. There's one that held. There's one that held. You were hoping one would break even without the advantage of momentum. Does that make sense? And I'm not beating you up, man, but what I'm saying is that you forego the first two. Your triggers aren't even the same color. No triggers are through the key Fibonacci areas. It's an aggressive trade. Does that make sense? Look at this entry where your large and your synthetic are up, where you have strong triggers on the small chart, where it pulls right back to support inside of triggers at 55, which is about right here, where that odds favorable momentum is already established, where that potential to break has already been verified. I love that you made a little money here, but this entry, the second entry, Sid, do you see it? That's the easier one. That's the higher probability one. That's the one that has momentum and the potential to break. And you've just got to learn to sit tight for a minute. Give yourself those advantages. Especially when the market's not coming from a strong top or bottom, because these areas are even more likely to hold. I hope that's helpful. Guys, I don't mind telling you if you pulled one over on the market. I don't mind telling you if you got lucky, because I want you around for the duration. But Sid, until you start writing the whys, well, I guess you did. You wrote them. So your whys opened the door for a lesson on momentum and path. So that was good. All right. Ron, odds favorable, momentum, back of the bar clears, nothing in the way, easy money. I mean, come on. The most successful traders I know do the same thing every day. Most successful traders I know take the same entries, take the same exits. Most successful traders I work with have the exact same look on the large chart. And beautiful, beautiful. Boaz, you put clear path. Of course, you have a different version of clear path, but for the kids in class, large triggers hadn't quite broken the one-to-ones. With divergence on the trade, I love that you get in on the way down. You let it reach the top and then come down. And that's an easy trade. Really nicely done, Boaz. And then Morgan, odds favorable, clear path. Your arrow was off on the pick. You didn't get in trading into everything? Was that your entry, Sid? Or was that your entry? That's where the arrow was, I think. You want to see a cool trick? If you if you put a circle on your entry chart, it'll show up on your large chart. And that way you don't ever have to worry about the arrows. I can see exactly where you entered on both charts. And guys, this is helpful when you're coming back for study. Because here, it's not great, right? And here, it's pretty awesome. You got in after it broke. Right on. So you made me go through all that when you actually took the really nice entry. I like it, Sid. Great job. Great job. All right, Morgan. Odds favorable, weakening trids. You took the shot one tick after trouble. So, Morgan, you're okay, Sid. I'm glad that you took the other trade because that was gorgeous. That was an amazing trade. The first one made me pucker a little bit, not gonna lie. So, Morgan, back of the bar has to clear, right? Isn't that the rule? Back of the bar has to clear? Yeah, when you're sick of waiting for trades, you don't do it. And then it turns into the perfect trend trade. But because you were trying to get tricky and break your rules, you missed it. And you said, oh man, I missed it. Morgan, this was your next entry. And you said, nope, you know what? Let me get in all the way at the bottom, where momentum is dying. Smacked again. So Morgan, I don't think it's like that sometimes. I think you broke a rule. That was an avoidable loss. And guys, this is a great lesson. And Morgan, I hope you're in a good mood. What's your recovery time after you realize you broke rules? Right? What's your recovery time? Morgan's wasn't fast enough to catch the best trend trade ever to get it all back plus a lot more. So because of rules breaking here, missed the ultimate opportunity here, felt like he missed out, so he tried it again down here. Does that make sense? And Morgan, I've watched you trade, and I know in this one, at the area inside of triggers, with my stop above, and then above the reversal bar, and if you didn't catch this one, Morgan, on the snap back to the small triggers and the mid band and the one-to-ones inside of triggers, with rules met on the large chart, both of these are high probability trend trades. Does that make sense? Both of these areas inside of triggers are high probability trend trades. And then that's a medium probability scenario because you're losing momentum. The divergence, why? Okay, so let's address that. You said that this divergence would scare you. Oh, because it's the third. 1, 2, 3, huh? Makes sense. That's fair. These divergences already did their job, though. They already pushed it up. It came back down. It's different. And I think you are. And I think that's one of the things that happens when you start adding trades is when you start adding trades, if you don't know your trades like the back of your hands, if you don't know the rules without hesitation, without conviction, what happens is you start to mix them, right? So Morgan said, oh, I can't take a trade with divergence because it kills the chili dog. Ladies and gentlemen, does everyone remember how many divergences it takes to kill a high probability trend trade when you have odds favorable momentum and a clear path? Takes 3, doesn't it? So if I have a high probability trend trade, divergence shouldn't scare me unless it's in triplicate. But if you're trying to catch all the trades, right? I think this is important. Knowing what gets you in, the rules, knowing what gets you out, knowing what gets you in, what gets you out. And I believe that is in that everything you need, but I'll drop it in again. Your large chart was beautiful, Morgan, and you just kept skipping the best trades. That was a high probability trend trade entry. $100 maybe, break even. This was a high probability trend trade entry. Probably 300 because it may not have gotten you break even. So it's okay. That's a part of it, guys. But you've got to go back and look at it. You got to talk about it. You got to say, all right, what do my large charts say? So when you can name your trades, you're welcome. People used to think I was crazy. Name your trades before you enter it. Why? Because you need to know how you're going to manage it. And I think this is a good example. Because I've done it, Morgan. I've taken the perfect high probability trend trade and then exited because of divergence, like one divergence. And I'm like, shoot, that's not a 50-50, right? But if I say before I enter the trade, I'm taking a momentum-based trade. If momentum goes away, Wayne, have a good one. I still say what you do isn't work. I know it's a lot of hard work, but man, I would do what you do. So you get this if then, and Morgan, I'm probably taking this way beyond what you need. What are my advantages? If my only advantage is momentum, then a loss of momentum is a great reason to exit. If my advantages are momentum and entry, but I don't have a clear path, I've got to look for a reaction where that path isn't clear. Tuna Turbo, LS, and an S10. Nice. So much fun. So much fun. Great lessons though, Morgan. Thank you for posting that. It sucks to take two losers. I know that it does. But I really think you got a little confused. Bad top, strong triggers. Entered on a pullback to the mid band right here. So it's odds favorable, clear path, easy entry, perfect exit, Pete. And Pete, that's why I don't worry about you. You're such a great trader that you could take that one and have a loss and it doesn't faze you. Pete's like, well, shit, I'll just take the next one that fits my rules. And you did it perfectly. Nicely done, Pete. All right, Morgan. Am I beating you again? Odds favorable. So you were thinking chili dog. Lesson from earlier was not entering a chili dog when the market is indecisive. So you've been saved from a loss. Entry would have been here. Yep. So Morgan, yeah, one of the things, when you see the dance, it's a pretty good indication. Even if you had taken it, it would have been rules met. One of the things Ron used to say, and it makes a lot of sense, is Ron would say, man, I need a market that's moving, right? I need a market that's flowing. I need a market that's zooming, because that's what momentum is. And if the market can take the time to just stutter, yeah, that's not a market that's moving and zooming and binging and banging. That's a market that's trying to figure out what the hell it wants to do. Heartbeat. And you become more in tune with it. I was talking to my buddy, and he's like, man, how come I can't find good chili dogs at 10 p.m. on a Thursday? I was like, dude, because nobody's in the freaking market to push it. There's no momentum behind it. And that's a good one. Great heads up, Morgan. See, you can be taught. Have your fiance call me. I'll let her know. You're trainable. Sonic is still open. And then Joel says, check it out, Morgan. Odds favorable, potential to break, perfect entry, quick profits, out with divergence at break even. Joel says, maybe simple is good. Maybe focusing on trend trades instead of only chili dogs when you're so good at trend trades is a great way to make money. Beautiful trade, Joel. And you could have also been in up here. Nope, that was a termination. It's not. Great patience, Joel. Joel says that's a termination. Let's let it break. I'll take the pullback. Entry's a little high. Beautiful. Great job. Oh, no, it's right below it. Great job. My self-proclaimed slow learner. You got it. It's the hardest thing in trading, guys. What do you think? What's the hardest thing as a day trader? There's my answer. Doing nothing. Doing nothing kills me. Doing nothing aggravates me. Doing nothing, let's be honest, it just pisses me off. I hate doing nothing. But I'm getting better at it. This is a good example of how not hearing the melodic voice of Nexgen. This is a great example of how management pays dividends. I want you to see this. Odds favorable momentum. I made that pink so I didn't clash with someone yesterday. Clear path. Does everyone see it? Large chart's absolutely perfect. Entry is at, we'll call it 67.75. It's 65.75. Not only did you take profits, but you went break even. And when that trade failed, that's turning with the KISS plan $100, a failed trade into a $100 winner. Do you guys see that? Great entries create manageable trades. And even if you got in at, what, 67, it still went down to 65. You still made your 100 and went break even before things changed. This is why having a plan is so important. And repeating that plan every day until you find a way to change it. All right, Joel. All right. Joel, I love it. Still have momentum? I disagree. Background still red? Who cares? I'm going to do my chart read. Let me know what you think. If you disagree, talk to me. So my smalls inside the large, that's weak. Anything can happen triggers. I do have a clear path, 100%. So my large chart is giving me 33% of my advantages. Does that make sense, Joel? And I'm not beating you up. We're new, right? So I'm going to write my rule number 3. And Joel, I don't have any rules that say background red. And I'm not sure where your rule for a red background came from. My rule says area inside triggers for entry. And when I look at it, here's your triggers, but here's your areas. So I don't have momentum to push it down. I'm outside of the retracement zone, and I'm just hoping that that fib holds. So if I'm talking in terms of advantages, I have 33% of what I look for. Does that make sense, Joel? And it may still go down. It may still go down. How did you pick your stop? Because your stop is on the other side of the fib, on the other side of 1-to-1s, and all the way up at this fib. Would you enter the market here? Because you know those small triggers have to roll by the time you get there. This is one of the reasons why I think talking in terms of rules helps a lot. Whoops, that's my untitled workspace. Apologies, guys. Well, and it's still right there. We'll see what happens. Boaz missed it. Odds favorable, clear path, pulled back to resistance and triggers. Just wasn't your money today, Boaz. It was close. Just wasn't your money. But that's a great read. CL's in a coma today. Whoop, there it is. The trade's so nice, he posts it twice. And guys, I don't care what trades you take. I don't think I can be more clear about that. It doesn't matter to me if you break rules. My job is to help with the chart read. My chart read right now is I don't have momentum. I do have a clear path. I don't have areas inside of triggers. The only thing that I would say is that if I were interested in this trade, I may force the market to go in the direction I'm anticipating instead of just hoping that a fib holds. Oops, and I'm about to crash my Ninja Trader. But that's totally up to you. Here comes the crash. Here it comes. You can feel it. Boom, there it is. That's what happens when you start drawing on your charts and drag them too quick. We'll get that back up. I like it though. Joel, did that make sense? That did make sense, right? You're like, okay, advantages. It doesn't mean there's not a trade. I can't stress that enough. All it means is that you know what you're getting into. It means you know maybe that it's not perfect. You know that if things start changing, maybe you have to manage. That's it. That's all it is. There it is. We'll see what happens. It's pretty good. Let me open up my S&P real quick, and I'll tell you what. Whoops, almost opened NASDAQ. You guys don't want to see that. NASDAQ is fast, guys. Have you ever had a day where you're like, man, the S&P is flying? When the S&P is flying, the NASDAQ's going 50 times faster. It's crazy. So got my S&P coming back up. This one tends to take a minute. Oh, and look, and it's the wrong contract too. So I have to put that on the 06 contract. So I'm going to double click up here, and I'm going to turn that 3 into a 6. And I'm going to do the same thing on my small chart because these rolled. There we go. Now we'll get the right one in. But even now I can see that price reached 1-to-1s. Arrhythmia? Is that AFib, Ron? And you know the only reason I know that is because my wife put herself in it 6 times during nursing school. Bob, have a great day at work. Keep trading the way you do. This is probably going to be your work pretty soon. That's what we're all rooting for, right? That's the goal. I hope that's the goal. While you guys get to trade, I get to teach you how to read indicators, which is pretty awesome for me. I love it. All right, Boaz. So odds favorable, and it's not a clear path, right? Take care, Alessandro. This is the potential to break, and it pulls right back to support inside of triggers. And with that much momentum and the potential to break, it goes right to the target. What's the MON? M-O-N. Momentum, clear path. Oh, the momentum. Momentum's insane. Momentum is beautiful. Maybe that N was an M. Jamaican. Hey, man. Go along, man. Everything is screaming up. Great separation, great separation, great separation. That's a beautiful look. Love everything about it. There is your S&P. That one was into a termination condition. Now you have odds favorable, potential to break. If you wanted to take a shot, could you activate a limit order? Couple ticks below a mid band inside of triggers. Do you guys see it? Look at the momentum, the potential. One area inside of triggers. That's pretty magical. And now my path is clear. And my path will remain clear until I get to this fib. Does everybody see it? This is what it looks like. Oh, my momentum is slowing. Oh, my momentum is gone. My area is on the wrong side. Dang it, they hit a termination. 90% of your day. That was some shenanigans. Look at that one. It is going down when everything says down. Just wasn't high probability. Nice one, Joel. Guys, if price reaches resistance and all the triggers are below, is that resistance more likely to break or hold when all of your triggers are red and going down? What do you think? Resistance. Price pulls up to resistance, all of my triggers are below it. That's a termination condition, no long trades. Does that make sense, everybody? What's up, Tony? Well, you paid extra. So if I can't go long and all my indicators say down, some people will take a short. That's what Joel did. It makes sense, doesn't it, based on the chart read? And then because it's not high probability, if something changes, he might manage. But Joel, this is one of the reasons why I like you guys to put your trades in the room after completion, because this might be your trade. And I don't want to put the Ricky Bobby voodoo on you saying that you don't have momentum or a good entry area per the rules. I like it. It's a nice trade. All right, guys, time for the second break because you guys are slowing down on me. I'm going to go find a quick snack. I'll leave you guys with crude oil. When I come back, post them, guys. If you have questions, ask them. If there's anything I can help you with, give me that opportunity. I'll be back in 3 or 4 minutes and can't come back. I just said it, Ron. I'm getting better at it. I'll see you guys in a few.